Financial markets are being brought back to their roots as we return to a traditional business cycle. Returning to a more typical business cycle means we look to improve business fundamentals, things like revenue, earnings, and future growth prospects, and fiscal legislation like tax reform to sustain momentum in the economy and stock market. A traditional business cycle does mean that market volatility may be along for the ride too, but this ultimately may create opportunities for suitable investors. So here are a few things to keep an eye on for the rest of 2018. To start, the new tax law, which lowered businesses and personal tax rates, will continue to play a role this year. The $1.5 trillion tax cut passed at the end of 2017 has already started to have a big impact on major corporations, small businesses, and individual taxpayers. We think there's a lot more to come. Lower corporate tax rates initially grabbed the most attention, but the legislation delivered a larger than expected boost to individuals, which should provide support for future consumer spending. The law's impact on both personal and business spending could add needed fuel for U.S. economic growth. For the stock market to continue moving higher, we'll need more of the strong corporate profits we've seen in recent quarters. Companies are able to keep more of their profits thanks to the new tax law, which can make their stocks more valuable. In addition, a stronger economy, aided by business spending and manufacturing activity, provides further support. So while a stronger economy tends to benefit stocks, it can raise concerns in the bond market. In a growing economy, inflation may increase, which can pressure bond prices. And expected moves by the Federal Reserve to raise interest rates may also impact bond prices. And while we like bonds for their steady interest payments to investors, fluctuating prices can present a challenge. Despite the pressures bonds may face in the next few years, they can play a valuable role in maintaining a well-balanced portfolio. Overall, a few things to watch out for include the ongoing trade disputes, higher oil prices, and the upcoming midterm elections, which can increase volatility in the market. So we may see more ups and downs in the coming months, but that's when it's important to focus on the many positive fundamentals, like business investment and corporate profits, that we expect to power the economy and stock market for the remainder of 2018.